Morning, everybody. Hey, look, light. I've got light again. How are you all doing? I bought some lights yesterday. I'm not going to get the electrician round to fix my light problem. I just bought some new lights, lamps. Easy solution, 50 quid, Amazon, done. So I've got light again. You can see me. Look, it's brilliant. And they're LED. I've got remote control, so I can make myself darker. I can make myself have lots of color going on and all sorts of things like that. But I'm just going to go with on. Now I'm not going to be able to... Oh. There we go. Light. Brilliant. Morning, Paul. Morning, Evil. Morning, Barry. How we doing? Unfortunate break today on the FTSE at the Open. Didn't get on this, unfortunately. But yeah, lovely break. Pre-market range was too small today. But yeah, broke really quick. Hasn't got anywhere yet. This spread is getting ridiculous on the FTSE. I might have a shop around for another broker. The reason I use Darwinex is the DAX spread is awesome, but the FTSE spread is terrible. So I might have a look at some other brokers. Unfortunately, Forex don't have the FTSE. So I've had this with brokers before. Morning, Mumo. Morning, James. Which is why I switched away from Axie. When you start becoming profitable with a broker, or when they identify that you're an A-book customer, not a B-book customer, what they do is they make the trading conditions less favorable to basically encourage you away because they don't make much money out of you. So I've had this experience before with Axie. The reason I switched away from Axie was because when I started making money, all of a sudden execution got a little bit worse, spreads got a little bit bigger, and I said to them, you know, what's going on? They said, oh, just market conditions, and you know, this is how it's changed. And I said, well, I've seen other people's charts; they don't have the same spread as me. They didn't have an answer for that one. So I'm getting the feeling it's been a very, very good month this month, and I'm getting the feeling that they're encouraging my my spread to widen a little. So I might have a look around, but it's just really hard to get these on with the FTSE. But anyway, so FTSE is a clean break long, but if you're using SIH and you're using my recommended 10-20% ranges, you're not on it anyway. So I will take the 5-minute ORB today, which will be 126. So that's perfectly within the zone. DAX is broken short. So we'll see how we go there. Morning, Blue Trader. Morning from Pontevedra. Cloudy. We've got the biggest storm of the century in the UK at the moment. We've got 120 mile an hour winds. I woke up this morning, had a look in the back garden, and I've got a load of furniture under a black cover in my back garden. And the black cover was over that side of the garden, and a couple of the chairs were upside down on top of the other chairs. So it's windy, well windy. Probably seen on the news. It's Storm Eowyn. And Ireland is going to get battered. So good luck in Ireland today. Morning, Peter. Right, so whiz through the news to start off with. Yesterday we had a lot of news from Trump. I'll go through the scheduled news first, and then we'll have a look at financial juice. Trump was speaking yesterday at the World Economic Forums, and boy, did he come out with some crackers. But anyway, unemployment claims came out pretty much on target, so not a lot of movement there. Retail for the CAD was down dramatically, but the CAD didn't really, I've got CAD yen up, look, didn't really bat an eyelid yesterday. I think it's more worried about what the hell's going to happen with the trade tariffs. So yeah, a little bit of downward movement on US dollar CAD yesterday, but obviously Canadian the other way. What's the best thing to look at? Pound CAD probably. So yeah, so this is a good indication of obviously yesterday's news. Nothing. So the CAD didn't really move yesterday. Although it was negative news. This morning, we've had the interest rate announcement from Japan, 0.5, which is what we were expecting. The market has already factored that in, so we didn't get any movement on it this morning. We did, but it's you can see from the ADR dash, got a couple of yen hits, but we've had a move, just about hit there, but it's not dramatic because we were expecting it. And as we know, that yen has been not against the pound so much, but the yen's been kind of pushing and pulling for the last week or so quite nicely. So as you can see, we're kind of on the way basically. So this is the direction for the yen if interest rates increase. So I suspect we may start another down leg, but we'll see what happens. But this morning I was expecting a little bit more movement, but it looks like it's all factored in. So we've had that spike up into resistance, push down into propulsion, and pull back. So the actual move really is that much, not a lot. So that's the yen increase in interest rates. So they are now becoming much more in line with the rest of the world in the fact that they're using interest rates to control inflation. Today is PMI day, so we've got the first one literally just about to hit in 8 minutes, which is the Eurozone PMIs. Then we have, sorry, it's Eurozone is the two combined. So we got the French, then the German, then the Euro, which is a combination of the two. So that's why that one's orange, because we've already got the result by the time those two hit. So we got potential for big movement on the DAX this morning and obviously on the Euro. Then we go to 9:30, which we've got the pound PMIs. And then this afternoon, 15 minutes after market open, the same as these, we've got the US dollar. So be careful at the open. The market is potentially going to sit around and wait for the PMI numbers. It's only 15 minutes, but there is a chance of a whipsaw before that. The DAX is doing it basically, as you can see at the minute. So opening range there on the FTSE, I'll be looking to take a break on that when it goes somewhere. But you can see on the DAX this morning, we've had a push down, we're pushing back up. So they won't want to drive until we've got the PMIs out. So we might not get a move on the DAX today. It might be a bit of a whippy one, but we'll see. Yeah, I kind of like to get this spread down. I've had to offset my orders by quite a distance to encompass this spread. Might have a look at what Global Prime's got, see what they're like. Right, so that's your news forecast for today. We've got Lagarde speaking this morning as well. Overnight, Bank of Japan, lots of stuff said by Bank of Japan. Nothing particularly exciting in there. It was all pretty bog standard stuff with an interest rate increase, CPI going the right way, blah, 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 blah. So there's nothing particularly exciting in there about FX movements that I could spot this morning either. So we'll whiz through that. Back to Trump. Japanese economy meeting forecast increasing. Price indicate inflation at 2% or higher. Yeah, so it's all pretty good stuff basically. Real interest rates at significantly low levels. Continue raising interest rates if outlook is realised. So basically what they're saying is we're getting our interest rates up in line with you guys. Yeah, so we're sitting up at the 3 to 5% ranges. They're still down at 0.5%. They've been at negative 0.1 for 15 odd years. So this is them getting themselves up to the rest of the world, and then they will become a normal currency. So where we've had that trend continuous and that carry trade continuous on the yen for years, potentially that is going to change the outlook for the yen, and the yen will become more of a tradable currency in mean reversion. So not that it hasn't been in the past, it's just been a bit more squeezy. So Trump, I would rather not use tariffs over China. So you can see there's massive moves yesterday. I got on the Dow yesterday, which was beautiful. There's the trade from yesterday. That's behind my head. You see that? There's the origin. Yes, just behind my head. There's my entry on the opening range break, just behind me. And that was Trump. Well, actually, Trump kicked in about there, I think. Somewhere around here, Trump kicked in. Anyway, yeah. So he rallied the stock markets. But the overall theme from Trump yesterday was we're going to tax the crap out of everybody that we import goods from. We're going to encourage everybody in America to make their own stuff. So if you now are a business in America and you manufacture what you sell, you will only pay 15% corporation tax. So a huge incentive to stop importing stuff and make it. So make America great by making and selling inside its own area. There was a lot of other bits and pieces in there as well. Obviously, most of it was about the tariffs. Need to go back a bit further. Oh, that's actually overnight thing. Let's go back further to the Trump stuff. There we go. Bring corporation tax down to 15% if the product is made in the US. And I would guarantee US energy supply security to Europe. So obviously, oil and gas exports. He's saying, yeah, buy it from us, don't buy it from Europe. Basically, it's all about the business. I would demand lower interest rates. This is interesting, but he is going to have a fight with the Fed. The Fed are cautious about dropping interest rates, obviously, at the moment, because inflation is incredibly sticky. Trump is going to go and talk to Powell and say, drop the rates. I don't care what you say, you're going to drop the rates. If you don't drop the rates, I reckon Powell's going to get sacked. But yeah, so interest rates in America will be coming down, which basically means negative US dollar, bullish stock market. Yeah, so everything he said yesterday is bullish for the stock market. Businesses are going to make more money because they're going to be taxed less. It's the biggest round of tax cuts we've ever seen in America. So basically, US dollar potentially could drop on all of this information if it all comes out and comes to fruition. But it's not something that's going to happen overnight. Yeah, but stock markets going to love this because it's going to be good for business. If you don't, you will have to pay a tariff. So this is Congress will pass the largest tax cuts in American history, making everybody richer. They can spend more money. The dollar will come down, meaning that you can buy more with it in other countries, which is fantastic for us. So yeah, so there's a lot of stuff happened yesterday, but it was kind of reaffirming what he's been talking about before. Some of the stuff he's done, though, is like for the rest of the world is, you know, honestly, you've got to have a screw loose. Yeah. I don't think we should be spending anything on NATO. All right, opt out. See what happens when you get attacked. Yeah, we're not going to help you. We're just going to sit there and go, well, it's the whole point of NATO is a deterrent. Yeah, you attack one NATO country, you attack them all. What they're basically saying is if we're going to pull out of NATO as a US, we're going to leave all the other countries isolated on their own. If they get attacked, we'll just sit there and watch. No, you won't, because we will stop supplying everything to you. You won't do business with you and you'll go bankrupt. Can't do that. Sorry, Mr. Trump. There's lots of other reasons you can't do that as well, because every time you need to go into any Middle Eastern country, which you do on a regular basis, you need the UK. We won't be doing that anymore if you're pulling out of NATO. So, you know, it's just some of the stuff he says is this is why the market goes nuts. It's just not doable. You know, the US military will be sitting around and the heads will be going, what? It's just not going to happen. And there's lots of other stuff that he's come out and said as well, which is just ridiculous. But anyway, this is what Trump does. I expect the Fed to listen to me. It's like an adult talking to a child, isn't it? Powell, I expect you to listen to me. Now, what you're going to do is drop the interest rates. Again, I would consider talking to Powell on interest rates. So what you're saying is he needs to listen to you, but you will consider talking to him like a human being. Anyway, so yeah, lots of stuff said. We'll see what happens. But yeah, he's pulled out the, obviously he's already pulled out the Paris Climate Agreement. So yeah, let the world burn, Trump. Let's not build any more wind farms. Let's drill. Let's use lots of fossil fuels. Let's blow the planet up. Oh, hang on a minute. You can't spend all your money because you're dead. Think about it. PMIs for France. Anyway, there's my opinion on what Trump's up to. Euro US dollar, we just had a signal on that. That is an RSI just starting to kick off. I think that's a 4 hour. Yeah. So we just got some movement. Let's have a look at what that was. 45, which is 3% up on manufacturing. Services down by 0.3. So that's bullish euro, as you can see. So that's bullish for the euro, which means the DAX will hopefully be coming down. Not much reaction. We had a little bit of a blip down, but we're sort of holding on the DAX at the minute. Germany is the largest PMI contributor, obviously because of the car manufacturing side of things. So 830 is the German. If the German comes out as positive as well, if we get a double positive on the German, we should get an ADR on the euro today, on the euro pairs. So that's coming out 8:30. So keep your eyes peeled on that. So that's your overnight news. Yeah, we'll see what happens, but we're back in Trump world. It's fun. Morning, JC. There seems to be a few reputable brokers that allow 0.1 minimum lots for indices. Yeah, I'm not worried about the reputation of the broker. I'm worried about the spread. All brokers are reputable that are regulated. So it doesn't matter which you pick. Just pick a regulated broker. It's not a problem. I'm more worried about the spread. And it's only the FTSE. So, I mean, what I might consider doing is finding a decent FTSE broker that's got tight spreads on MT4 or MT5. I don't care which I use really for this. But and just trade the FTSE on it. And then I can go back to Robo Forex and dump Darwin X. Because I only use Darwin X because of the DAX spread. So I might just split my trades across different brokers, different brokers for different instruments, which I've done in the past for scalping stuff, but it's just not ideal. I just don't, I mean, all brokers have got bigger spreads on the FTSE. It is a bit more tricky to trade. But I don't know. Global Prime are good. I've used them in the past as well for indices, and I'll go back and have a look at what their spreads currently are. Don't think I've got a Global Prime platform at the moment. Might have a look at TD365's MT4 spreads as well. They're very, I mean, TD365 got the tightest fixed spreads in the world, but not for MetaTrader, only for their own platform, which would involve going back to manual trading, which I don't want to do. Trump don't give a... No, he doesn't. Anyway. Okay, so there's the negative reaction coming into the DAX, which you would expect on the Euro pop. Short on the FTSE. So, wick rejection on the FTSE. Let's have a quick look at the levels on the hourly. So like I said the other day, we are really due a pullback on the DAX. We're due a pullback on all indices at the moment. But the DAX specifically, well, that's day 9 now, I think, isn't it? 1, 2, 3, 4, 5, 6, 7, 8, 9. Day 9, straight up, parabolic. If you want a definition of a parabolic move, that is a parabolic move. Parabolic moves do not involve pullbacks. They are just rockets. So after a parabolic move, think about the elastic band theory. Yeah, the more it's stretched, the faster it snaps. So you be prepared for a good strong ADR day to the downside at some time soon. So this could be it today. We could be breaking down today. So propulsion is TP. Where's the other TP? On the DAX. Why have I only got one sell on the DAX? Yeah, I only took one sell on the DAX for some reason. Not quite sure why that happened. Anyway, so second, just put that manually, that second one. Yeah, and obviously the FTSE has stalled out. So that move that we've just had today is a double top on the 2-day high. So potentially that's looking like a good short as well today. So TP1 on that is above propulsion. TP2 is yesterday's low. And I'm just going to move that up inside yesterday's low just to make sure. So we'll see where we go on those. We'll come back to those in a bit. Right, so FX wise, ADRs today, we've got two, which are the yens, Swiss yen. This is obviously off the back of that news. So you can see, obviously, we're reacted off of ADR. It wasn't particularly strong, that yen move. It may well continue today though. So and we got US dollar yen is also a nice bounce, but that is looking like it's going to continue to the downside. As I say, this US dollar could well weaken here. We're right down at support on this as well though, so be careful trying to short this. I mean, I wouldn't want to short it, it's too expensive anyway, but it's a good looking ADR reversal here. So you've got rejection at the previous week's low, 5-minute reversal alert, is all the way up there. It's quite a long way away, but that's your ADR hit there, and you can see we bounced straight off of ADR. Previous reversal was there, so that was your reversal, and we're basically putting in a stop run, potentially W, so higher low, but a bit difficult to get a break of structure on this now. So that candle there potentially, but I mean, this is the last bull move. This is one of those tricky ones where you get the bull move, which is the same candle that made the bear, so it's an outside bar basically. So realistically, I would say that was a reversal alert there. So a little bit tricky at this level, but they look like they're buying it up, so it looks like a pretty good long. So those are your ADRs. RSIs, same as yesterday with the Aussie CAD, still extended on the 4-hour. Still pushing. This is the pullback on this leg. We're pushing into 61.8 into propulsion. So this propulsion move here. Now this isn't a great propulsion gap here because it didn't break that low. Propulsion move stopped here. So not the greatest resistance in the world, but as you can see, it's a good area of congestion in a downtrend, but that reversal alert looks like it's holding. So I would say this is the start of the pullback leg. It's done a fair amount of it already, so potentially that type of move and continue up into here. Canadian dollar obviously will go down with the CAD, with the US dollar. So if we do get weakness coming through with what Trump's doing, the Canadian will weaken alongside it. The other thing Trump said yesterday as well, which he wasn't highlighted in red, was talking about OPEC. Why are you not finding what I'm typing? Google search buggered. Okay, so basically he was saying yesterday about oil pricing, which is interesting, and I don't get this at all. Again, something else I don't get about Trump. Funny that. He was talking about OPEC and wanting to reduce the price of oil, or forcing the price of oil down. Why won't you search? What's going on? Why is search not working? I don't know where it's in here somewhere, but basically what he was saying was, I'm asking NATO nations to increase spending to 5%. I'm not sure we should give them any money though. God. Where's the OPEC thing gone? Because it's quite important, because it's really going to affect Canada if this comes into effect. Can't find it. But the upshot basically was, what he's saying is he wants the price of oil dropped down to something like $60 a barrel. So he wants oil prices down. Now, bear in mind, US and Canada are massive oil exporters. They're net positive producers, so they have excess, so they can sell it at a cheap price. What he was talking about getting the Saudis to also drop production by X number of million barrels per day, meaning that they can get rid of the excess in the US and sell it cheap. So he's talking about driving the price of oil down. Now, I don't quite understand this because obviously they make a lot of money out of oil, but whether this is to try and harm Canada, again, something else to annoy Canada to stop them, because he really wants to put those tariffs on Canada if they don't stop the import of refugees, etc. But yeah, so you've got to bear that in mind as well moving forward for the Canadian dollar. There's a possibility of quite a big rally against the CAD if that happens. So OPEC overall are in charge of production of oil, barrel counts, pricing, all that sort of stuff. But obviously Trump can do all sorts of things to manipulate it from behind the scenes. So just bear that in mind with the CAD. There's a possibility of the US and the CAD both getting into a little bit of trouble moving forward. So Aussie dollar CAD is extended. You've got 3 hourlies as well on the New Zealand dollar CAD, extended to the upside. That's coming up to resistance as well. Not massively exciting resistance, but that propulsion move there, this is kind of the origin of that. So there's a good chance of a pullback on that one. I'm only looking for longs at the moment on that. We've also got New Zealand dollar Swiss is extended to the upside. So again, you're coming up to potential resistance here. Propulsion. And we've got the New Zealand dollar, US dollar. So lots of strength in the New Zealand dollar going on at the moment. And that is again coming up to this accumulation. Whoops. So supply demand zone, that propulsion gap. We've resold it multiple times. We've now broken it. So we're going to find this area of balance is going to form a sort of stumbling block. So a good ADR reversal today. If we get negative US PMIs, we'll be up there. That would be a good spot to short. But equally, when this propulsion gap fills, which is virtually done, look. Almost done. Literally. That much. I can't even draw the lines because it's that close to filling that propulsion gap. So this is basically the origin of that previous sell move, which is holding at the moment. So there we go. So that's your RSIs. Banked yesterday. Oh no, sorry, this morning I banked pound Swiss. I'm going to post this later. I'm going to start posting results for position trading and everything via the social media system I've got, which posts it out automatically to Discord, Telegram, Facebook, Instagram, and X, rather than just sticking it in Discord, just so that it's everywhere. But I'll post that because I just got to screenshot it basically and post it out. But pound Swiss exited 0.8% this morning, so that puts me up on 11.8 on the month. That was a 3 position, but obviously it stagnated for a good week and a half. So first, second, third, exit in propulsion. Obviously there is a good chance now we have just about broken that weekly high. If this propulsion move hasn't got enough sellers in it from here, we're just going to literally pull back into this area here or somewhere around that area, and then we'll get a buy back up into here. So it may well have more legs on it. Swiss franc weak based on the Swiss National Bank saying that they could go down to negative interest rates again, which obviously is going to weaken the Swiss. But the pound hasn't got a lot going for it, so it's going to be quite a hard job to get there. As you can see, not really doing a lot. So everything else I've got on is fine. Pound odd is the only thing that's getting a little bit annoying now. It's a beautiful spot. It's just too close for me to take another trade. This is the sort of area, you know, this is, do I want to do that? This is the area that you, if you need to do aggressive drawdown control, this is when you do it. I've only got 4 positions on this, so it's not really a contender for aggressive drawdown control at the moment. It's just annoying in the fact that we've been sitting here sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9 days, pretty much 2 weeks. We've been sitting here, not able to move. But you can see, obviously, this is the previous start of that move. They're rebuying this area over and over and over and over and over and over again. There is a lot of supply of buy orders down here. So as you can see, we've got this weekly low here, which we rejected. We rejected it again, rejected it again, rejected it again, sort of rejected it yesterday. Now we're rejecting it right now. There's a potential hammer just gone in. Well, there is a hammer just gone in. So this is basically looking like it could be another reversal point. If this holds again, we will definitely be breaking those highs and potentially challenging the 2-day high, and off we go. So this could be the turning point. So if you needed aggressive drawdown control, this is where I would be doing it. Buy stop above the high of that reversal alert on the hourly. Yeah. With a nice big order. If you need aggressive, that is, but it's too close for me to take another one there, because I've already got one on here, which is literally an hour's move away, so I can't really take another position there. It's really tempting to do it, but it will overexpose me if it triggers. Whoops. If it triggers and we do break that low, because if we break that low, we are going to collapse down another leg. So if you look at where we're headed, if we break this propulsion, there's very little there in the way of support. We've got this monthly low here, which would be 150 ADR. That would be your last chance saloon really on it. Other than that, we're coming back down here. So there's a lot of room to drop. If this doesn't hold and that doesn't hold, so this will be my next position there, which will be 5 on. And then obviously look for a push back up into there. But it is bullish still. Market structure is bullish. Yeah, we're looking for a higher low, and this is exactly where I'd expect it to go in. So we'll see. But pound odd, it's not a massive amount of drawdown. It's just sitting there at the minute, and everything else is fine. Mumo, saw it on Discord. You're considering ORB EA version 2. Yep. If you want to know about it, look at yesterday's member stream. I've always loved the ORBA. Banked tons on my Forex funds back in the day. Yeah. Yeah. So I've just basically done a. The trouble with EAs, well, it's not the trouble with EAs, it's the trouble with me. The trouble with me and EAs is I like to have everything highly configurable. The problem with having everything highly configurable is you have too many options, and you can get information overload. So I've stripped back the opening range breakout strategy to its purest form, which is the 5, 10, 15 ORB. But executed the logic in a different way. So I've incorporated into an EA the SIH logic for minimum maximum range sizes. Yeah. Although minimum range size I've in my system parameter permutation testing is irrelevant. Max range size is relevant. So I've incorporated dynamic ADR based minimum maximum ranges into the EA, and a system where it goes for a 5-minute ORB only, and uses a stop loss. So it's a stop based system. The stop is a percentage of ADR, and it only takes 2 trades on each ORB. So you go 5-minute ORB long, and if it works, great. You can or can't cancel off the opposite pending. If that fails, we take the opposite break. If within 15 minutes we've had multiple failures, we bracket the 5, the 5, the 10, or the 15. It's always the 5, obviously, but the 10 or the 15 as well, depending on range size, and we take a second attempt. But that's it. Then it stops. So the ORB at the moment, the way that works is it goes for a break, it goes for a target, it goes for a profit target. And when it breaks, if it comes back inside, it breaks again, comes back inside, breaks again, comes back inside, breaks again, and it will keep trying for you and keep trying to get a trade on that works until it gets either a trade that works and hits the target, or it doesn't and it keeps doing it. The difficulty with it is it doesn't happen often, but when it does go like that, and it's not often, it does that all day. When it does, you hemorrhage a load of cash, and it tends to give quite a lot back, which is why you see lots of stagnation in the P&L and then lovely rallies. So this new version is going back to the very original basics of Tony Crabell's strategy and how to trade it. And I've remodeled that based on less rules, much simpler logic, and using a range filter just to see where the sweet spots are on each index, because they're all slightly different. Some are faster than others. And the results are really good, better than the ORB EA. Not so much better, but more consistent. That's the thing I think is more important with the strategy, is the consistency of it. But also very highly profitable as well. I went through all of this in the members stream, but the profitability, it's all the way over there. The profitability, the return on drawdown ratio with it is pretty impressive. So we're up to 7.8 return on drawdown. Yeah, so for $1,000 drawdown over a year, you're returning 8K, which is huge. And also I've been looking into using martingale, because the strike rate is 33% roughly on all breakout strategies. This is no different. And it's unusual not to get a clean break in a week. So if the maximum run of losing days in a row is very rarely 5. It happens every now and again, but very rarely 5, because of the nature of the market. The market cannot, stock market does not sit around for 5 days and do nothing. It just doesn't happen. It's get manufactured to go up, and you've got 100 different, in the case of the NASDAQ, for example, you've got 100 different stocks. Some of those stocks are going to have something happening this week, and it is going to move the index. So using a martingale, not martingale itself, but using a lot multiplication factor really can help with profitability as well. Obviously, it affects drawdown, but you can get some seriously big numbers in a year out of this, 50 grand plus, depending. And this is just using a standard 2-lot risk. So I've been doing lots of system parameter permutation testing on the ORB strategy, and I did all this originally, but I did it in a different way. So this is a more simplified version, and it looks really good, but I can't change the ORB EA because the logic is completely different into the way that this is being calculated and this how it's trading. So anybody using ORB, if I recode that to go, actually we're going to do it this way now, everything they've done and everything they do doesn't work anymore. So you can't do that. So like I said yesterday in the members stream, it's a bit like Apple. Yeah, you release an iPhone and then they release iPhone 2. And iPhone 2 has got a load of extra features and functionality. If you don't want those features and functionality, you stick with iPhone 1. Yeah, so this is going to be along those sorts of lines. That's not going to change ORB. If you want ORB version 2, this is what this one does. If you don't like it, then stick with that one. But if you prefer it to the original, buy it. I'm not going to just stick a different color on it and sell it again to you. Yeah, this is a totally different thing. Same as SIH, it's a different thing. It's a different strategy. This strategy is completely different to the opening range breakout strategy. It uses the open. In that respect, it's the same, but it is a different trading strategy. This is a hedging strategy. ORB is a stop loss based strategy with a target. The other ORB that I'm working on at the moment is an 1 to 2 trade a day strategy. No targets. It either works or it doesn't, and it exits end of day regardless. So there's features of SIH in it, there's features of ORB in it, and it's kind of a hybrid that meets in the middle and does the same execution in a different way. Because there is no right way to do it, is there? So we know that. Which is the best range to use? Well, today, using the 5-minute pre-market ORB would have got you a 2R. If we'd have known that, we would have taken the 5-minute pre-market ORB and taken a 2R target. We didn't know that because we can't see the future. Every day, there is always 100% guaranteed a way to make money out of everything. You just don't know what it is. And that's where the trick of trading comes in. So yeah, so that's the upshot of it. But I covered it all yesterday in detail in the member stream for a good hour. So, but it's in development. It may go nowhere. Yeah. Has it been released yet? No. I haven't built it yet. James, were you not there yesterday? You'll remember. If you haven't, go and watch it. But yeah, it's just I've been doing. So basically, I'll show you this, right? This should give you some confidence. This is my Top Step X Combine that I started on Wednesday. And it trades the exact strategy I'm automating. I've only done it for 2 days. Yeah, it's not a very big test, okay? But I've only done it for 2 days. But look at the trades I've taken. Yeah, how few there are. 4 trades. 3 trades, 7 trades in total in 2 days. That's it. So it either works or it doesn't, but it works in a way that it's got a much higher probability of generating daily alpha, as in creating a profit on the day. Yeah. And it only trades 2 instruments per session in exactly the same way as the ORB and the SIH do. Yeah. So but this, I'm trading it manually here because obviously I can't automate it, but it's exactly the same strategy, just done with the good old buttons. But yeah, so there you go. So, and that's the important factor, as it always is. 85% longs. Interesting. Look. Average trade duration. Look, 88 minutes. Not a scalping strategy. It's a break and hold strategy. It works on the premise of, you know, as I keep saying in here, and I will never stop saying, the market is binary. Yeah, there is only 2 things every day that can happen. It will either go up or it will go down. The candlestick very rarely closes like that. It either closes like that or it closes like that. Yeah, or a varying degree of those. There, it's binary. It can do 2 things, go up or down. You need to find a way of generating an edge based on a binary outcome. The obvious thing to do is don't lose as much when your binary outcome is incorrect. It's very, very simple. Very hard to execute, which is why we love using EAs, because we don't have to think about it as human beings. We just do it. What's your opinion on indicators like MACD and RSI? Well, what do you think? Are you new in here? Go and have a look at my website. I just realized my links aren't appearing, are they? For some reason, that's gone wrong again. Oh, no, they are appearing. Yeah, there you go. There you go. There's all the indicators. ADR, RSI, and TDI. Support, resistance, propulsion. There's loads of free education on there, including the bootcamp. Go and watch all of that. It will teach you. But yeah, RSI, yes. MACD, no. But up to you. Every indicator lags. Every single indicator lags. There is no indicator that predicts the future. If there was, we'd all be using it and everyone would be millionaires. There would be no debt. There would be no hunger. There would be nothing. But then again, you would never be able to make money trading anything, because if everybody had the indicator that predicts the future, nobody would ever get it wrong. So it doesn't matter what indicator you use. Every indicator in use tells you what's happened in the past. The RSI on the chart here is telling me that the price went up here. I can see that. It's telling me that the price went down there. I can see that. It's telling me that it sat around and then it moved higher. I can see that. Every oscillator you place on your chart tells you exactly the same information. Every moving average that is pointing in an upward direction is telling you that the price has gone up. I can see that. Yeah, every indicator lags. My own indicators that I built and developed myself lag. Yeah. So this indicator, the market reversal alerts indicator, has told me that there has been a break of structure and price has broken down. I can see that. It's telling me at the moment the price is continuing down, but if it breaks above that area, it's going up. When that happens, I will also be able to see that. Yeah. Indicators are there to signal conditions in the market and signal entry conditions into a strategy. Nothing more, nothing less. There is no combination of them that works consistently long term all of the time. Yeah. You have to use some kind of discretion. There has to be some kind of risk reward or some kind of luck involved. Or you do the same thing as the banks do, which is what I do, which is position trade, which means that you doesn't matter. You don't need an indicator. You can give me any instrument on any time frame, and I could press the buy or the sell button based on which direction you tell me to go, and I will generate a profit because I know how the market moves and I know how to get in and out of it. Everybody else is trying to find the indicator or the strategy that is consistently profitable. There is no such thing because there is no 2 days trading that are ever the same. So every single system or strategy that you backtest that tells you there is a result of X or Y will never repeat because the past is never going to happen again. Yesterday, the market did this in this exact order with these candlesticks. It's never done that before, and it won't do it again. So if you said, hey, look, every time that it goes above that level, for the last 20 times, it's done it 10 times, I should sell it there. The next 20 times, it won't do that. It will do the opposite. And then you'll throw that away. You'll move on to a new strategy, and then you'll find an edge in that one that lasts for a couple of months, and then you'll throw that away, and you'll go in a cycle for the rest of your life until you die, never making money in the market. Whereas if you just press the buy button or the sell button and wait for the market to become profitable, you will be able to extract money. Simple as that. That's what's taught in the bootcamp. But you need indicators to formulate a strategy. So all an indicator is doing you is telling you that that's just happened and that's just happened. I know you can see it, but this time, why don't you buy it? It has a 50-50 probability of working out from that point onwards. And that is down to market movement based on bank and institutional order flow, which again, you can't control and is random every day. Sorry to make it complicated, but that's what it is. And that's what we have to deal with. So this is breaking short right now. And if this breaks short and continues down, I'll make money. If it breaks up, I have a plan to not lose money. That's all you could possibly do. So my plan with position trading not to lose money is when I press the button is not to take a loss. It's to wait for price to move down so I can average into the next leg up. With the SIH strategy, if it breaks down and doesn't go to target and pushes up, I will put a break on the order and wait for the market to move to a level where I think it can possibly reverse from, and then I will try and exit with a profit. With the opening range breakout strategy, I exit the positions until the market has decided it wants to make a break, and then I use that break to pay for the losses occurred during the waiting time for the break. So all a strategy is an execution of orders in order to try and get positive alpha. That's all you can do because you can't predict a random event. It's like the weather. We know the weather today is going to be hideous. There's going to be 100-mile-an-hour plus winds in Ireland. We can predict it because we've been looking at it in the past. But no one on this planet right now can tell you the maximum wind speed because that is a variable. It's random. We don't know what it's going to be because it hasn't happened yet. I don't know what the next candle is going to be either because it hasn't happened yet, but I can deal with it when it's happened. So it's all about reacting to what market does. That was a waffle, wasn't it? Must be Friday. Right, let's go for the zones. So zone trader, I've banked 11.48 this month, sitting in drawdown as usual. Pound Swiss I didn't get out of, unfortunately, on this. Didn't quite get me to where I wanted it to be. That's the only thing that's really moved at the moment. Everything else is just flip-flopping around and sitting there. So I had to duck out early. Yeah, go and watch the replay, James. It's worth watching. It doesn't start in yesterday's member stream. I think it's about half an hour in we started talking about it. You'll be able to tell when I've finished the zone. Here we go. So there you go. somewhere around about 25 minutes in. You were there, look. Oh, yeah, you said you left early. There you are. Right, zones. Sounds quite interesting. I have both SIH and ORB. Cool. Hybrid sounds good. Yeah. Just diversification. There's nothing wrong with running the ORB strategy. There's nothing wrong with running the SIH alongside it. You're going to get different results with both strategies because they're different. If you have another strategy slotted in the middle, which is a hybrid, you've really got good diversification. Some of the days, if you get a triple clean break, if you get a clean break day, basically running all three strategies, SIH is going to kill it. ORB is going to kill it. ORB version 2 would also kill it. So clean break days, which happen 2 out of 5 days, typically, you're going to get a massive payday. So as long as the risk is controlled on the days where we don't get clean breaks, which ORB isn't the best at doing, SIH is much better at, and the new version will be much better at, you will absolutely clear up. In fact, there's an argument, I think, for potentially just making a living just doing those strategies. But there's months as well where it just stagnates. When the market is really stagnant, it will really struggle to make money, and those are those down ticks we see in the back tests. But as I say, back tests are only back tests, aren't they? But it shows us what is the best to do and what is not the best to do, which is the important part, which is what robustness testing is all about, is finding out, is it better to use a wide stop or tight stop? Is it better to use a big target, a small target? Is it better to look for a big range or a small range? It's not going to tell you which, it's going to tell you it's better to do this. So you pick something around. It's all rough. Everything's got to be rough because there is no exact in trading. Right, so I'm going to go through the zones. Aussie dollar CAD, new target triggered, sell triggered today, so I need to replace the sell. I'm going to go for, obviously, the highs, and I'm going to incorporate the start of that leg down there. So this supply demand zone where that propulsion move started, we had the same move started there. So that's where they sold, that's where they added, that's where they added. We've never come back and retested that level. So if this continues, this parabolic move to the upside, we're going to find a hell of a lot of sellers in that place. We've also got a massive accumulation break here, which is where this trade has been taken. So 3 trades on. As we are bearish on Aussie dollar CAD, I'm looking basically for a new, obviously, lower high at some point, but this is a real big parabolic move, look. So I think this is potentially the start of a new leg up, possibly based on CAD becoming weak with the US. So it's really hard to pick a target to the downside in this because there's just so much chop. But anything below, obviously, there is profit. So somewhere in there, maybe I might look to get out, but I'll wait and see. Want to see the price starting to go back that way first before I make any decisions on that. Aussie dollar Swiss, new trade triggered, need a new short. These highs, basically, that's too close. So yeah, just going to pick those highs there. So sell pressure, break of structure. That's where we are at the moment here. So either that one's going to work and we're going to come down. And again, it's bearish. So I'm looking basically for potentially a new low to go in, but not going to take that much. I'm just going to grab half. So there you go. So new zone above there, looking to get down into support. Aussie New Zealand, not going anywhere. I'm short. I'm still short. I can't do anything with it because it's just not moving. So that's the same zones as have been in place pretty much for the last week or so. Out of Aussie US yesterday, flip short. So target. Targeting the US. So this area here It's kind of what we retested and tried to hold up before we broke down. Then we added to the shorts, then we broke above it and added to the longs, but then we broke down, then we broke up. But it is an area of interest that we keep using. So I'm going to watch those lows for a quick exit short. Upside on this, very tricky, because we're coming out of this horrible base from the middle of December. So we've got that low there on the top of that little accumulation. So this area here is basically an area we were buying, and then we bought more, tried to buy more. We found a little area of balance before we broke down on the news. So that area there, if we are going to remain short, potentially is where we will find more selling price action coming in. If there are no more shorts there, obviously we're just going to do market structure back to the upside. So target wise, it's a horrible thing to target when you've got an accumulation like this, but we've got these lows. So if it does break down and it pops back out of there, I would say we are possibly going to do that. It's very difficult to call the US dollar at the minute, so I'm just kind of staying a little bit cautious and just trying to scalp small bits of money out of US dollar movement at the minute. So I'm going to keep a fairly close target on it, which is basically these lows here. So that's where the EA will get me out of the lows. CAD Swiss have a long on at the moment. We're not going anywhere this week. So re-entry at the wick of the news and exit at the high. Euro odd. Just missed my target this morning. Just missed my target. Look at that. So these lows, basically, I was looking to get bought up, and it just stopped short. Nothing I can do about that. I'm only looking for shorts on it, so I'm just going to stay short. I was toying with the idea of putting a break even on it, but I'm not going to. We have held this high. We're holding this low and we're holding this high. We're now back bang in the middle of the range. So it's either going to put a new leg down in, which it's kind of doing. But I mean, this is a big move up on this euro. Obviously, it likes the numbers. We just had the rate cuts after German. So the German PMI figures have. Why are they not there? Come out. All green. So massively bullish euro. Wow, really interesting reaction on the DAX today. There's no negative reaction to the euro move on the DAX. So German stocks holding very well off the back of that positive PMI. Euro obviously going to be flying. So interesting move. Right, so yeah, don't know what to do with this. Just going to leave it. It's in profit. There's only one position, so we'll just wait. Next short about to go in on Euro CAD. Again, reselling the highs. So that is now in the zone. So this is guaranteed new entry, assuming that we don't push all the way back down to there in one candle, in which case obviously it won't because it's too close. So looking for that to act as range high. Target to the downside is still there. If that new position comes on, though, my average will move up, which will allow me to target a 50% retracement on the leg. But we'll see where I get this next entry on that. We'll look at that on Monday. Euro Swiss, looking for longs, didn't get it. So, blimey. Where shall I try and get in long? We've already tested it, look. So I'll try one there, but I can't get into this. I just can't get the pullbacks on it at the minute. So I'm going to try that level for entries long. Euro pound moving up. Next sell is going in at the double top. There's a possibility that this area will hold, which is bang on the next entry. So if that does hold and it just rejects, it's pretty much going to be back to my last position anyway. So that would be my next entry short up there. Target at the moment is the symmetrical triangle break to the downside. After that news event, propulsion, retest, and off we went. So I'm looking basically for them to come back down and retest this area if we're going to remain bullish. But it's a long way. So I'd love to get another trade on this to get the average up. And then I can start targeting some of these other areas. But it's just really protracted long price action. Now, this was looking like a lovely rollover starting yesterday. Now that Euro news has come out, not looking quite as much like a rollover. So obviously the fundamentals potentially have shifted on the Euro. Traders now looking to have more rate cuts. We were told already there's going to be a rate cut coming next week by Lagarde. So this isn't really a shock. This is what we're expecting, and it should weaken the Euro moving forward. So I don't think this spike that we're seeing at the moment is necessarily going to hold. It's probably a knee-jerk reaction, and we'll probably get an A-shaped recovery on it in the next 48 hours. So Monday, Tuesday next week, I think we'll probably be back down again, but we'll wait and see. So next entry going into the upside. Euro New Zealand's not going anywhere, looking for upside and downside in this last support before that break up. So looking to come back down. This is the danger area at the minute, which we've kind of tested a couple of times and rebought it, but we're making new lower highs here. So it is looking like we are wedge break to the downside coming down into this area. Euro US, next entry short is going on in a second. So accumulation, so propulsion gap is filled. Accumulation, basically this area of balance before the breakdown. I'm looking for some sellers to come in here. This might turn into a tricky one with this US dollar. We'll wait and see. But target to the downside is still going to be this area here. That potentially is a target to the downside. Also, this resistance here is now, because we've broken it, potentially a bounce point. So my average is down here at the moment. My average is about to flip up at some point today. So I'll readjust this on Monday after we've seen what happens with the market. Don't forget we've got the PMIs for the US dollar coming out this afternoon. In 30 minutes, we've got the pound PMIs coming out. So there's still potential for lots of movement on this today. Stuck basing on the pound odd. This is never going to move. This thing is just not ever going to move. Either do it or do it. Just don't do that. Pound CAD, looking for longs, can't get in at the moment. So looking for this accumulation area here as an entry. It's just grinding ridiculously slow at the moment. It's very, very difficult to pick an entry point for longs on this. So I'm sticking with that for the minute. But there is an argument for moving up to here. And seeing if that becomes a range low. But we're going to need to see what the reaction is at this high and this break here. So today we should get an answer on that. If it breaks to the upside, I can start moving my entry type point up. If it holds that area, then I will probably move my entry point up to here. But I'm going to wait and see what happens. We've got 9:30, we've got that. This afternoon, we've got the US PMIs, which will also affect the CAD. So we've got some potential movement on this. So this is worth looking at again on Monday. Pound Swiss, have a long on at the moment. I'm targeting this area. So on the position trader account, I've already closed this out. The EA's closed this out already for me. That's my target from a zone perspective. And this propulsion gap here is ultimate target. So this propulsion gap here is what we have just tested today. So I'm looking basically for market structure to hold long and come back up and test this area. So I'm getting out there. I am not trading this short. It's too expensive. So once we do get to target on this, I'll just basically look for a zone to enter on a new long. But I've got to get out first. Pound US dollars moving up very nicely. Again, targeting the accumulation break. There's a tiny little accumulation in there, which I think this is, if you go up to a 4-hour time frame, that is one massive propulsion gap. So I think that's probably fine for a fill of that propulsion. So that's my target to the upside. Really difficult one, this, because the entries here, because of the news, were so far apart. But that's exit to the upside, and then I will be flipping short. New Zealand dollar CAD, second entry gone in this morning out of the longs last week, earlier this week actually. So next short on that, up at the highs. Yeah, just look for a rejection at those highs where we started selling from. Just a bit of a mess before that. We got this area of balance before, which moved up to a new area of balance, and then we had the break on the news. So we've certainly broken back. So market structure definitely long on it. So looking for a pullback. Really, this low is going to form the leg there that we will then look to pull back on. So average will jump up when that trade goes in, and then I will look for a pullback probably into that area. But right now, if this is the supply demand area for that leg, if this propulsion gap, when it fills, acts as resistance, there's a good chance this will just start to come down from here. And obviously, if you look at it on a higher time frame or look at it more zoomed out, we are bearish still on this. But this was before Trump got in, started making waves and devaluing the CAD. If those trade tariffs go on Canada, this thing's coming up here. So we just got to wait basically at the moment now for what Trump is going to say. He said the 1st of February, I think it was. Again, I don't think I'm going to know how to do a search. Feb. It's just not working for some reason. Google, Chrome's search function is just not working. It's finding them, but it's not actually going to them for some reason. Oh, there you go. Now it is. Oh, it's highlighting them, but it's not actually moving. Normally it zooms to the text. But there was February was when Trump said he was going to impose the tariffs, which was yesterday. Ontario voters go to polls on February the 27th. Anyway, you just have to trust me on that one. But basically what he was saying was, we'll give you till February, basically, Canada and Mexico, to sort your lives out and come forward with a plan on how you're going to stop immigration. If you don't, you're getting 25% tariffs. So February the 1st, if they haven't sorted it out, or at least come to some kind of agreement where we are going to put a plan into place, kiss goodbye to the Canadian dollar. So we'll see what happens with that one. New Zealand dollar Swiss, trying to get longs on at the moment. We have just broken out. The Swiss franc is very weak at the moment based on negative interest rate talk again. So I'd actually be happy to try a re-entry on these highs, nice and close, get it on quick. We buying into resistance as well, which is also tricky, but we have based here, look. It's a very weird sort of price action, this. It's just a mess, basically, going back to the beginning of this month. So it's broken long, so I'm just going to stay long, and I don't think there's any reason why the Swiss franc should strengthen. Unless Trump invades somebody, obviously, then the Swiss franc will go through the roof and everything will collapse. But hey, Greenland, you listening? Good luck. New short entered on New Zealand dollar, US dollar. Next zone to the upside, very easy support. So this is the area we were holding, and then we broke it. So I will try and get next on there. Nice spacing on this one. Yeah, nice easy exit. So yeah, at the moment, if it isn't going to hold this propulsion, or rather if this propulsion is going to hold, that propulsion gap there, we will be coming down anyway. New US dollar CAD, it's just not going anywhere. I feel like a broken record with this. I've been saying the same thing over and over and over again. I will get in again here, and I will wait for it to come down and break this range. And I seem to be saying it forever. And then we had the Trump effect, and now we've got a new range high and a new range low. We're still not doing anything. So yeah, that's my target to the downside to get out of this. I've been in it forever because it's 6th of December, because it's just not going anywhere. But yeah, we'll sort that out if it moves. US dollar Swiss, exit on this, 6 trades on. I'm looking for an exit. In fact, yeah, still a bit too much in DD. So I'm not going to get out of this with a profit. I'm going to get out with like about 0.25% loss or something. So in fact, we got news, haven't we? Got PMIs. If those PMIs come out negative, we've got a chance of breaking down today. Mind you, if we break down, the zone will just extend anyway, and I will get out wherever that move ends. So I'm going to leave it in place. What I'd love to see is price get to about there just before 230, 245 PMIs come out. If the PMIs drive price back down again, the next candle at 3 o'clock, that candle, if it becomes bullish, will be my exit. So obviously the zone will just expand with price as it pushes into it. So that would be perfect. Negative PMIs on the US this afternoon would be lovely. All the yen pairs, I'm out and flat, not trading. There we go. So there's the zones all covered. Right, that's all. Let's have a look at what the indices are up to. Okay, so clean break on the FTSE. Very tough distance-wise today. Look at TP1. It's absolutely miles away. Seems like an awful long way to go to get a profit out of that today. DAX is absolutely stuck. So this is your pre-market 15 here on the DAX. That's your 5-minute opening range. We literally haven't left the pre-market range yet, so there is no break. This dotted line here is 1.5 hours into market. Usually by 1.5 hours you've got either the high or the low of the session in, so it's either that or that is going to be the high or the low of the day with a 90% accuracy. So one of those is going to get hit and taken out. So if you're in this or you're not in this at the moment and you want an entry, opening range breakout, but use the first 1.5 hour range, because it's so tight today. When it does actually go, you've got potentially a very nice risk reward on your hands, assuming that DAX moves today. For some reason it's just stuck, which is surprising based on the amount of movement. As you can see, we've got ADRs being hit on the euro US dollar. The euro's off. So quite why the DAX is sitting around doing nothing when the euro's going parabolic, I've no idea. Unusual. Normally we get the inverse reaction on the DAX, but for some reason today the stock market is not paying attention. So euro US dollar, nice ADR there. Obviously we've got the PMIs this afternoon. If we do get those negative PMIs on the US, this is going to be off to 200 ADR, so be a little careful. But obviously if you can get out intraday, you're fine. So yeah, lots of movement going on at the moment, specifically ADR. So euro Swiss and euro US dollar, both ADR hits this morning. 5-minute reversal alerts just about to go in. Weird. They must be on a timeout for 2 hours or something. I'll have to look on my phone. So yeah, looking for a breakdown. We've got gap fill to do as well. So I'd be very surprised if we don't get a reversal alert on this today. But watch for a potential reaction out of there. Right, there we go. That's all I've got for you today. Anybody got any questions? Anything else to discuss? Beautiful break on the FTSE. Just approaching 2R. DAX is looking like it wants to go short as well, but it's looked like that quite a few times in the last hour, so it may do absolutely nothing. We'll see where we go. Oh yeah, this is the new ORB that's in development, or the testing. It's basically it's a testing EA. Just see how I've got it set. Yeah, so it's very similar to the original opening range breakout EA. But basically what it's doing is so the stop is based on ADR rather than opposite range. So the difference between the ORB Mumo, if you're still there, obviously the ORB EA uses opposite end stops most of the time. This one uses percentage of ADR stop. So the back testing that I've done has shown that it's much better to use a percentage ADR stop and get that huge risk reward easily on clean breaks than it is to wait for that, because the size of the range will determine your risk reward, which makes it a little bit more tricky in big 5-minute ORBs. Those are the days it makes it harder to make money, whereas with a fixed stop it's easy to make money regardless. I think this is using a 4R or a 3R. What are we? 195, 768, 2468. So that's a 4R. So when this stops out, basically all it does, as like that, it leaves the short in place. But the next part of the strategy is we now analyze the 15-minute ORB, which is there, okay, for a second entry. If that doesn't work, that's it, we're done. So the max loss you could incur is £300, dollars, or whatever your risk. I mean, I'm using 300 because that's what I use in the futures, but is use whatever you want to, but you will have a max capped downside. Your upside is also limited, but it's limited to 4R. So if you have 3 trades that go wrong and you catch the break that does go right, you get a break-even day. Yeah. So it's just about applying the logic of risk reward to the way that the open happens, and it's analyzing the different types of open. So it either, like this, it clean breaks, yeah, and it's a nice clean break, or it's a messy clean break, or it's not a clean break. There's 3 things that happen. The messy clean breaks will stop you out, but that doesn't mean you can't get again another opportunity to go. So it's just the analysis of all the different logics that you can apply to the open using all the different opening ranges. So that one isn't taking the 15 because it's not coded to do so at the moment. Well, it's not set up to do so. But if it had taken the 15 ORB, would have hit target. Yeah. So $300 loss, $1,200 win. Happy days. We win. So we're up 900 on the day. That's it. And at that point, we're going to leave you. And again, I've done all the back testing. Should you or should you not go for the opposite way? How many times have you seen the market go and then retrace? Yeah. Let's leave that in. Let's try and go for another 1,200. Worst case scenario, we might lose another 300. That only makes 600 today profit. Yeah. So it's all about keeping those risk rewards tight enough to be achieved, which is what SIH does, and using the ORB logic, but applying dynamic ranges to it based on average movements, because obviously we know the movement is very different in earnings fortnight to other areas. So you know, that's showing a double loss because obviously it's not doing that particular strategy, but that's a different strategy. But there you go. Look, clean break. Yeah. Yes, we could have had a 15R. But these parabolic 15Rs are, well, look at ADR, somewhere in the region of 2 to 5%. Yeah, so look at ADR. A parabolic move like that you just saw is going to happen somewhere between 2 to 6% of the year. Yeah, maybe once a month you could have got one of them which paid you a fortune, but to get that you have to sacrifice all of those, and these happen every day. So it's a case of you go for the winner, you're going to get a strike rate of about 10 to 15%, or you can have a strike rate of 30 to 40%, which, to be fair, would you rather win 30 to 40% of the days or 10 to 15% of the days but get a massive payday? By the time you get that, you'll be panicking like crap here, going, I've got to get my money back. That's not going to help you, is it, from a psychological perspective? Get in, get out, get the money and walk away. Be done. Everything should be done within an hour and a half on an index. If it's not done within an hour and a half, it's probably going to be very hard to make it do it. Yeah, so that's basically the logic. This has obviously all come from studies. There we go. So there's a perfect example. Break short, loss. Break long, profit. Banked. Net profitable day. Only took 2 trades. Only need 2 trades. It's either going long or short. That's all it ever does. Yeah, it's binary. Goes up, goes down. That's it. Evil, are you still testing the lazy fib and fib pullback? No. Well, yes and no. So for those who don't know what we're talking about, in the member streams we were covering 2 new strategies. So the lazy trader strategy that was running on the VPS in forward testing, we found that bug with it that meant that it couldn't execute orders properly. So I basically fixed that bug by building an EA that worked on a single instrument and took all those trades. I did a load of back testing with it across multiple pairs. Because it's a position trading strategy, that banks and scalps very, very quickly. So for those of you who don't know what the lazy trader strategy was, what it did was at 9 p.m. every day, it took a, if it was a bull day, at 9 p.m. it took a short targeting 10% of the average daily range. If it was a bear day, it took a long targeting 10% of the average daily range. And the idea is, after a bull day, in Asia, you get a pullback of some degree. In Asia, you normally get a range, yeah? So during a range, you get a pullback. So the idea was it would get lots of tiny profits every day, and it did it, and it did it extremely well. When it didn't work out, you position traded, yeah? So if you got in short and it decided in Asia to go long and then it continued long, you'd take another short the next day at 9 p.m. So the distancing would be different every day on every trade. And then when you get back to break even, you get out. So you look for tiny profits over and over and over again. And what it's really good at doing is building a P&L that looks like that, while also building drawdown that looks like that. But then the drawdown will disappear and then it will come back. And then it will... But the problem with it is that style of trading is exactly what I do every day here. So the reason I stopped pursuing it is for 2 reasons. First of all, it's incredibly dangerous if you get a squeeze, because you are getting in on day 1 of a potential 2-month parabolic squeeze. You don't want to be in on day 1 of a parabolic squeeze. So when I did my back testing, I found there were instances on certain pound pairs over the last year where it just blew the account. Yeah, I don't know how much backtesting the person that came up with the strategy had done, but when I actually tested it in more depth, it blows accounts, because you're in day 1 parabolic, whereas with my strategy, where we're waiting for strength of movement before we enter, you're never in on day 1. You might be in on day 3 or 4 or so, but it's never right at the start usually of a parabolic move. It can be, but I mean it's unusual. The other problem with the strategy is there is a lot of duplication of trades in there. So you'll have all of the euros go the same way at the same time. You'll have all the pounds go the same way at the same time. And with those ones that work out very well, they're great. But the ones that don't work out very well, that hold for multiple days, you end up paying a fortune in swaps. So the lazy trader strategy, because it was a position trading strategy, it's exactly what you can do with the position trader EA. It's just a different way of getting into a position. So I decided to get rid of it. I did a lot of development on it, but there's no advantage to doing. For example, if you use the ADR reversal strategy using 100% ADRs and scale in half an ADR apart, it's going to be similar. You're going to get similar results. So there's no point in introducing diversification into the portfolio with a strategy that trades the same way. It's like saying, I've got the best breakout strategy in the world and I'm going to diversify my portfolio by doing another breakout strategy. You're not. You're taking breakouts. There is a breakout strategy, there is a trend strategy, and there is a mean reversion or range strategy. There are only 3 strategies that exist. What I was doing was using a position trading strategy and applying another position trading strategy to try and diversify the portfolio. No point. Just use the position trader EA or the market reversal alerts EA. It's the same thing. They're both mean reversion strategies. Yeah. So this was a push. I'm going to mean revert it. RSI, mean revert it. ADR, mean revert it. It's the same thing. What I need is a breakout strategy and a trend strategy. Now, a breakout strategy, SIH and ORB, I've got that on indices. I haven't got one on Forex, but I've got it on indices. So I have a breakout strategy. I have a mean reversion strategy. What I don't have is a trend strategy. So the trend pullback strategy is the one that's running here, which has been reprogrammed to work. So it's like it originated as the fib pullback strategy, only on yen pairs, because yen pairs trend. So I've got this running with capital. At the moment it's down, but we know that because I did the back testing, and it will go down. It will go down by anything up to 20-25%, and I'm fully expecting it. It's nowhere near 25% down yet. So it will go into drawdown when the market isn't trending, a la this. It's not trending. It's not going to make money, right? We have got 3 trades on at the moment here on pound yen, Aussie yen, and New Zealand yen, which aren't trending, but they're getting there. So this is locked in profit. Yeah. And we lost a US dollar yen today. But we're up $2,000 with a net of 1,700. So this strategy is running, and this is the fib pullback strategy, but it is not using Fibonacci. It is using ADR pullback percentages. So I recoded this to work so it's a single instance EA. The EA is just running on here. This one chart runs all yen pairs. And basically it's got different criteria for entering the market. So what it's doing is it's looking for a pullback of 20% from yesterday's high. And it needs to be a bull day or a bear day, which closes within the top 20%. So it basically, what I'm saying is the daily candle has to be a decent bull candle and close within 20% of the high. And then it needs to pull back 20% from the high the next day. And I will take a price action signal here rather than a pending order, which is what the original strategy worked on, which meant that if you place a pending order and price just A-shaped recoveries, you just take a trade for no reason and take a loss for no reason. With this, we're taking entry signals. So we're either waiting for a 3-bar reversal pattern, we're waiting for a hammer or tweezer pattern, or we're waiting for a 9 MA cross showing bullish price action. So basically, price has to pull back from a bull day and then have price action signal less than 20% or over 20% of the average daily range pullback. So it's a variation on the strategy. This is the one I back tested after doing that first back test across all the yen pairs, Swiss pairs, and then I tested it on all the other FX pairs, which I kind of cut short because I knew they wouldn't work because they don't trend. So the Swiss worked, the yen worked very well. So I decided to roll it out just on the yen because it has the highest return on drawdown. So this is in what I would class as alpha testing. Yeah. So, it's like software. You have development versions, then you have beta testing, and then you have alpha testing, which is before release. So this is in alpha testing at the minute. So I'm going to run this for around about a month. And then obviously, if that's okay, this will go out and you can use this. But it's diversification. It uses a stop loss. It's not a quick thing. People are going to hate the fact that it got in and it's sitting on it for 2 days. People haven't got any patience. This is why people don't make it in trading, because that's the only thing you need, because the market's going to go up and down all day long and it's not going to pay you until it's ready. So you've got to be patient. That's the one thing you've got to be as a trader. So this is working well. So the way this strategy works, because it's a trend strategy, the strike rate is somewhere between 30 to 40%, sometimes a little bit lower month on month. And it will stop out 70% of the time. So you're going to lose 70% of your trades. I'm not worried about going into drawdown. It's fully expected to go into drawdown a lot because that's what it does. But when it trends, it makes a fortune. Yeah. So this 1800 in net profit at the moment, if these trades all pan out that we've got running, i.e. if we get a continuation trend, we're going to be banking somewhere in the region of $6,000. Yeah. And we're not looking for a lot. Yeah. These aren't unrealistic targets for trends. And they're not the top of the robustness tests either. So it's all about patience on it. We're looking to generate somewhere in the region of 5 to 10% a month on average. Yeah, so 50 to 100% return on investment. So this is all you need. 3 strategies with a 50 to 100% return. Position trading, easy. This on paper, back testing, robustness testing, and initial forward testing, looks good. Breakouts, I'm looking for a Forex breakout strategy. I've got a few that I'm looking to implement this year, but I've got to build the EAs, do the testing, robustness, etc., etc. So once that gap is filled in Forex, because I've got it in futures and in stocks, in indices, obviously with the opening range breakout stroke stock index hedge strategies, I really want one for Forex. But the thing that worries me about this strategy now, which has never worried me in the past, is that all back testing you can do on yen pairs, you can only do with negative interest rates. Yeah. Where are we now with the yen? Positive 0.5. Yeah. So all the testing that I've done on this strategy is based on Japanese negative interest rates and bank carry trade, which I'm not convinced that is now a thing, because if those interest rates in Japan get above 1%, we're getting back into the realms of where everyone else in the world is. So I'm not sure this is going to be a trend monster anymore. And if it isn't, this strategy is not going to work. So that's the only thing that concerns me about this at the minute. This is why people struggle to trend trade, because by the time you've identified a trend, it's too late. You've missed it. Why is that not changing? Oh, there we go. With trends, you can say, right, that's looking like it's starting to trend. Yeah, you missed it. Right? So what you're looking for now? A new lower low. Oh, it continued to go down, but you miss it. If you don't get in here, which is the breakout, you miss most of the trend. Or like I'm finding with some of these Euro ones that I'm trying to get on along with the Zone Trader EA, I can't get on because it goes too fast. So you just don't get the entries. So Forex just doesn't have reliable, sustainable trends. So you can use, and this is how I used to trade. This is why I have these indicators on the chart. The shadow between 2 moving averages is the area to sell in a trend. But the problem with trend trading is if you sell it there, Yeah, that is a valid, lovely short entry, and it doesn't matter whether you get on that one. It doesn't matter where you get in. Your stop's going to be above the upper, in this case, the 72 daily. But look at, if you got in there, for example, look at what you actually got out of it. Back to break even. Yeah, that took 2 months. Admittedly, markets are fractal. You can do all of this on a lower time frame, but obviously lower time frame becomes less reliable. So it's a very difficult thing, trend strategies, because the only instrument we've had historically that will actually allow you to trade it as a trend is the yen. And I don't think this is necessarily going to be the case. If you look at the carry trade on the yen that took us from here to here in the last 4 years, if that continues for the next 4 years, this is going to be up at 200 yen to the US. They go bankrupt pretty much at 150, which is why this line's on the chart, which is where the interventions happen. If that gets to 200, you ain't going to have a yen. It's not going to be tradable because their economy will be bankrupt. So it's a very tricky thing to try and implement a trend strategy on Forex, because economies shift too often, meaning that trends change too often. And identification of trends is the holy grail. There isn't anybody out there that can do it with anything other than moving averages. And unfortunately, moving averages have to lag price by anything up to 200 candlesticks. There's no point in telling me we've been trending with a 200 moving average after 200 days have passed. I've missed it. So breakout is where it is. Breakout and hold is the strategy, a la SIH. TP1 just about to hit on DAX, hedged on the FTSE. Sorry, other way around. TP1 about to hit on the FTSE, hedged on the DAX. I'm going to close it manually because there's no way you are missing my TP by 1 tick and then going back. But this is the beauty, isn't it? It's the breakout, and then I've got a trailing stop running on the second one. So what I'm looking for is, if this is going to be a trend, that's what we want to get. But we're actually trading a breakout. This is where the money is made, identifying the accumulations rather than the breakouts. So I've got quite a few strategies that I've used in the past for breakouts, which I think have got legs. But knowing what I knew then and knowing what I know now, I think I can probably build decent models based around things like Bollinger. So that's, I think, what my focus is going to be, on trying to find a decent breakout strategy, because everything is going to break out, whether it's a false breakout or a breakout into trend, and the trend is long-term or short-term, it doesn't matter. The breakout is where we make the money. So propulsion gap breaks, for example, what I keep talking about constantly with propulsion gaps. Yeah, these propulsion gaps are large orders by banks. If you can identify the breakout and take the first propulsion, there's a potential to add to the propulsion to average into a very nice move. There's all that sort of strategy that I want to develop this year, but it all takes time. So let's hope the new course of the Bank of Japan won't overly change the yen, how the yen works. Yeah. Did you type that before I said all of that, or after I said all of that? Yeah, exactly. I don't know. It could become the next, like you say, it could become the next ranger of the century. Yeah. Look at how it used to be. The yen hasn't always been a trend monster. Yeah, it has always trended. I mean, it has always trended. Yeah, but it does also go through periods of stagnation, and these tend to be when the dollar is incredibly weak. Yeah, so what happens is the dollar strengthens, the yen never strengthens, because it just doesn't do that, because it's always had negative interest rates. It's like the Swiss franc. The Swiss franc cannot go parabolic to the upside. Its interest rate's too low. So there's absolutely no reason to put all the money into this Swiss, because you won't earn any. So you put it where you can make the most money. The differential between the US dollar and the yen has always been huge. Therefore, you buy it, which means it costs too much to short it. That's why the carry trade works. And this is why it's always been a trend monster. But it goes through periods of weakness in the US dollar where it stagnates. But even when it's stagnating, a lot of the time we have these nice intra-year trends which last for 3 to 4 months at a time, quarterly trends, which is, funnily enough, why I use the 72 moving average, 3 months. So quarterly moving average and a monthly moving average. So it's all to do with market cycles. But you get these periods where the US is weak, just after COVID in this case, where interest rates dropped to nothing. What happened then? The differential between the US dollar and the yen became the same. There is no reason to buy either of them or sell either of them. Interest rate rally, yen didn't do it. Boom. So is the yen going to rally its interest rates moving forward because it stopped overseas bond purchases in the US? If you can't see the future, you don't know the answer to that question, which is why we have to diversify strategy on a regular basis, because there isn't one that works forever. So it's an interesting period. This is what I'm waiting for. I'm waiting to see if we can get there. And if we can get there, I want to see what the Bank of Japan's reaction is. Because if that is the Bank of Japan's reaction again, i.e. an intervention, that is telling us that that is the ultimate line in the sand, 160. That's the new cap. The old cap was 150. The new cap is 160. If the new cap is 160, we cannot trend. So, you know, I'm keeping a very close eye on it. And we will see. Or else we can start trading as a mean reversion pair. Yeah. So this would be, yeah. So this is the thing. The yen pairs will be moved back into position trader EA as normal market structure traders. But you know, the swap is still too much to go short. So it would be a long only position trade instrument. We will see. We need to start to manually add a time frame to the message for reference. Need to start to manually add a time frame, time stamp to the message for reference. Yeah, I know. I wish they did that. They don't do that, do they? It's not me. That's YouTube. I can't help that. So if you could type in the time that you make the message, that would be handy. But then I'm just going to look down and go, what the hell was I talking about at that time? I won't know because I just waffle. Anywho, so we're pulling back on the pound odd. Look. Boing, straight back off of that low that I just said about. Look, there we go. Now, if I'd have kept that pending order on, I'd be happy as Larry now. My average would be down here somewhere, but I didn't. So yeah, we're back basically to V-shaped recovery on that pound odd. Why is that pound just rallied? Oh, 930. I've missed it. It's obviously bullish PMIs. We've got bullish PMIs on the pound. There we go. 48. Off of a 47 forecast, so a 1.3% increase on manufacturing. Services is up 0.4. It's not massive. Services is the one that's been stuck. Services inflation. So purchasing managers index for services up. So means we're not dropping interest rates. Bullish. Well, it doesn't mean we're not dropping interest rates. It means that there's a lot more restriction, and the Bank of England will think a lot harder about dropping interest rates. Doesn't mean it won't do it. So nice bull move you'll find on the pound today, which is lovely because I'm only exposed long on the pound. Euro pound has had both bullish and bearish news today. So there's the bull move on the Euro PMIs, and there's the bull move on the pound PMIs. Propulsion holding. So who's going to win today? One of them is going to be stronger than the other today. What else have I got on? Euro CAD shorts and Aussie New Zealand shorts. I need to get some more exposure on. I've not got anything else. Nothing else has been setting up at the moment. So FTSE today, clean break short. Lovely clean break and parabolic today, so straight down. The fact that we've just had bullish movement on the pound means that we're potentially going to get bearish continuation on the FTSE. You can see my target. That's yesterday's low. That is the previous day's low. These two dotted lines here. Yeah, so 5R is my target to the downside, assuming that we're going to get a reaction at a double bottom bounce. If it's that, it's that. If it's that, it's that. I don't care. That's where I get out. So if you want to look for a buy today, that's it, that area. The DAX basically is a hedge. So exit on the DAX hedge. There you go. Right, so this is your low of the day with 90% accuracy. By this is an old Larry Williams or Connor. I can't remember. It's one of the Larrys. This is one of the Larry's statistical analysis projects he did. So this is 1.5 hours. So the statistical analysis that he did was when we get to 1.5 hour into the session, you will have found with 90%, or I think it's 95% accuracy, I think something like that, 93, you will have found either the high or the low of the session, or the high or the low of the day in this case. So what that means is, as we've broken long, you want to be looking for long only, because we are 1.5 hour into the session. That is your low. Therefore, if we've broken long, that is not the high. Therefore, it means that that must be the low. Therefore, we are looking for trend pullback continuations. So bull moves into yesterday's high. Sorry. Where's yesterday's high there? Oh, sorry, yeah. This is pre-market crap. Ignore that. Yesterday's high, we're already above. So we're out in new highs. So this is, again, all-time highs on the DAX, look. Today, although this is pre-market stuff. So this high here is high of the day. So we've just broken high of the day. So 5R for me is just 3/4 of an ADR to the upside. Downside, previous day's high is potentially a good, assuming we fill the propulsion gap if it breaks down there. But obviously that would prove Larry's theory incorrect. But it wouldn't. It would just be one of those 5 to 8% or whatever it is. I can't remember what the statistic is, but it's less than 10%. It'd be one of those 1 in 10 days where that rule doesn't apply. And you do get them in rotation. So there we go. So that upside target I'm going to leave where it is. Downside target I'll leave. This has got the danger of being the same as yesterday. So yesterday I had a fail. I don't often get these, but a failed hedge exit. So that was yesterday's hedge on the FTSE, on the DAX rather. So we broke up, faded back down, broke down, and then we came back up again. 1.5 hours into the session, low of the session, low of the day. There you go. That's the statistic in real world example. We broke out. We went parabolic. That was the exit at 5R. So obviously what the EA does then is it places a pending short, waits for bearish price action, which got triggered here. And then basically we pushed up a little bit more, came back down a little bit more. I was watching this. I was very close to rehedging when we broke that high, but it didn't. So I held it. I think I had a pending order actually placed above there. And then I decided we'll give up. And then obviously the EA got me out anyway, so I cancelled that. I think it was there. It was somewhere. Must have been somewhere just above that high. But anyway, so that didn't work out. So we took the hedge loss, which was that. And then we took an additional bit of loss, which was that distance there between our exit and the re-entry. And then we took another little bit of loss, which was the loss on that trade as well. So overall, it ended up as a £500 loss. We had 2 clean breaks at £900 profit. So it's a 400 clear profit on the day with the 3 instruments traded. But that's a good example of SIH not working. It doesn't work all the time. Nothing works all the time. This is the thing. So yesterday was a bad one. So when you look at today, there is a possibility, because we're at all-time highs, there's a possibility of that happening again. If we get a parabolic break today up to 5R, and then it does that, gets me in and continues to rally all day to another massive bull candle, there's a possibility of another down day. However, it doesn't really matter, because this, hopefully, if it does the 5R, will pay for the DAX if it goes wrong. Yeah, and that's the whole thing. This is why we trade multiple instruments as a portfolio with the strategy. If one works and one doesn't, one pays for the other. If they all fail on the same day, then yeah, tough. Not a lot you can do, is there? But we'll see what happens. So that DAX, if you look at the DAX daily, this is the parabolic move. So there's your 3-bar reversal. Not very clean, but it's a 3-bar reversal. And then we've been parabolic since. So the chances of putting in another massive, if you look at the price pattern with the DAX, you don't often get two massive days back to back like that. What you tend to get is a massive day and a smaller one. Yeah, big day, small day, big day, medium day, larger day, smaller day, big day. Unlikely we're going to get a day like that. So there is a possibility of a day like that, which turns into a spinning top, or possibly some kind of nice rejection up and then back down again. So this should be a fairly decent hedge exit today if we rally, but we may well just put one of these in and sit there as a spinning top and not go anywhere today. It's Friday as well. It's always low volume day, but we'll see. It's not down to us. Let the strategy play out, let the edge play out, see where it goes. Right, I'll leave it there. I'll be back on Monday. We're going to obviously do the same thing Monday. We'll look at the kickoff of the week. Next week, we've got interest rates. It's bank holiday in Australia. No news. Sunday. No news on Monday. No news on Tuesday. We've got consumer confidence. That's it. So we go into Wednesday. So there's no news until Wednesday. Australian CPI. Then we've got the Bank of Canada rate coming down to 3%. Bye-bye, Canada. God, that's a double whammy, isn't it? What was the CPI on the CAD this week? It was retail this week, wasn't it? CPI. It was mixed, wasn't it? So we've had sort of neutral to bearish news. Next week on Wednesday, we've got bearish interest rates, followed by Saturday. If you haven't sorted out the immigration problem, 25% tariff on all imports. If there's one thing I wouldn't be longing at the moment, Canadian dollar. So yeah, be wary about that. So we got Bank of Canada rates next week. We've got the Fed rate, which is not expected to change. Although what Trump said yesterday was, I'm going to have a chat with Powell about this because he wants this down. So we'll see. This is going to be an interesting fight. We may be seeing Powell in the pub with John Wick crying over beer because there's a possibility he might lose his job if he doesn't do what he's told. Then we got the euro rate. So next week, huge week. 3 interest rates back to back. We got CPIs back to back, and we've got the CAD GPE and stuff on that Friday. But yeah, Wednesday, Thursday next week, potentially all change. All right, so have a good day. Anything you need, let me know. I'll be in Telegram and Discord rather than Telegram, but you can contact me in Telegram if you want. So we'll see what happens. I'll post anything that changes today into the channels, and yeah, back on Monday. And then next week on Tuesday, we're doing the member stream as well, which if I've had time to do more work on the ORB, I will go through that. If not, I've got a session planned on binary market movement. So we'll do that hopefully. All right. So anything else you need, let me know. Other than that, have a good day. Have a good weekend. Good luck with Trump. And I will see you next week. Have a good one.